Good morning, everybody. The November 19, 2018 School Land Board meeting will now come to order. Sorry we didn't bring the blankets for you. It's a little cold in here. First item on the agenda is number 1, approval of minutes from our last meeting on October 2nd, 2018. Assuming the board has had a chance to review and assuming no questions or comments at this time, could entertain a motion to approve said minutes for the record.
I move to approve.
Motion is made, seconded, and carries unanimously to approve the minutes. Next item on the agenda is the approval of the consent agenda. It's been related to me that items number 2A7, 2A14, and 2A25 have been pulled from the docket. And after the board has had a chance to review and assuming no questions, comments, concerns on that consent agenda as reflected with those changes, I can entertain a motion to a motion to approve the consent agenda as posted.
I move to approve.
Motion is made, seconded, and carries unanimously to approve the consent agenda with the exceptions as I stated for the record. Items number 3 through 6 will be held in executive session. We'll do so pursuant to Chapter 551, Subchapter D, Section 551, Tech 071 of the Texas Government Code for discussion and consideration regarding contemplated litigation and or settlement offers, or to seek or receive attorney advice or counsel related to items 3 through 6 in the docket. In subsection 551, Tech 072 for discussion consideration concerning purchase, sale, exchange, lease, or value real property related items 3 through 6 on the docket. Following executive session, we'll reconvene an open session to complete the docket. The next item on the agenda is number 3, open session will reconvene.
Good morning, Amber Long, Asset Management. Staff recommends approval of the disposition of tax foreclosure land per the terms discussed in closed session. Any questions?
I make a motion to approve.
Motion is made, seconded, and carries unanimously to approve item number 3. Thank you, Amber.
Thank you.
Next item on the agenda is number 4.
David Wells with Asset Management. Staff recommends approval of docket item 4 per the terms discussed in executive session.
I make a motion to approve.
Motion is made, seconded, and carries unanimously to approve item number 4. Thank you. Next item on the agenda is number 5.
Russell May with Asset Management. Staff is recommending the SLB approve the proposed sale under the terms and conditions as presented to the board and being in the best interest of the state and the PSF. Answer any questions.
I make a motion to approve.
Motion is made and seconded and carries unanimously to approve item number 5. Thank you, Russell. Next item on the agenda is number 6.
Thank you, Mr. Chairman. Members, for the record, Rusty Martin, Chief Investment Officer. Approval of this agenda item will constitute the approval of an investment by the General Land Office on behalf of the Permanent School Fund in Westbrook Real Estate Fund 11, LP. The Investment Advisory Committee is recommending that Texclo invest $250 million on behalf of the PSF in Westbrook 11. Westbrook 11 is a $2.5 billion closed-end global real estate fund sponsored by the Westbrook Group and is a follow-on to the $2.85 billion Westbrook Real Estate Fund 10 LP. Westbrook 11 will continue the strategy employed by Westbrook 10 and previous Westbrook funds, which focuses primarily upon opportunistic investments in the office and multifamily sectors that arise from undervalued assets or portfolios, corporate and government divestitures, and recaps. Also, in keeping with previous Westbrook funds, Westbrook 11 will focus on developing a diversified portfolio of assets located in the gateway cities of the world, including New York, San Francisco, D.C., Tokyo, London, and Paris. Texclo has a long-standing relationship with the Westbrook team, which began in 2008 and resulted in total original capital commitments of $273 million across 3 funds. That was Westbrook 8, 9, and 10. Investment management staff and the Townsend Group conducted due diligence and analysis on Westbrook 11 through comprehensive document review and a series of meetings and discussions with the Westbrook team over the past few months. In addition, the Westbrook team made a detailed presentation on Westbrook 11 to the PSF IAC and Townsend on October 30th of this year. In conjunction with this discussion, review, and analysis, Investment Management worked with Townsend and legal counsel to ensure that the proposed investment fits within the framework of the Texclo Permanent School Fund's Real Assets Investment Policy Statement and is in the best interest of the permanent school fund. Therefore, the IEC is recommending that School Land Board approve a $250 million capital commitment to Westbrook Real Estate Fund 11 LP. As always, I would note that your approval of this transaction is contingent upon Investment Management's completion of the negotiation and finalization of the legal documentation associated with the proposed investment in Westbrook 11. And with that, I'm happy to answer any questions.
Any questions from the board?
I have no questions. I make a motion to approve.
Motion is made, seconded, and carries unanimously to approve item number 6.
Thank you, Mr. Chairman.
Next item on the agenda is number 7.
So item number 7 is the consideration of a proposed charter of the Texaco PSF Investment Advisory Committee. This charter is a formalization of the IEC process that was recommended after a third-party expert study reviewed our processes last year. This is one of the things they recommended. I'm not going to go through the whole thing. It's fairly brief, but I would like to just go through some of what I think are the most important points in the charter. And this is just an attempt to formalize the process. That was a recommendation to more formalize AEC operations. And I would add that this was, the charter was drafted in conjunction with Townsend, our investment consultant, and with general counsel, and has gone through the Investment Advisory Committee review process twice, and this is the final result. The purpose of the committee, as you know, is to review new investments proposed by Investment Management Division for inclusion in the portfolio before those investments are recommended for approval to the School Land Board. In addition, the IEC periodically will review the investment policy statement to determine if possible modifications may be warranted. The membership is comprised of myself, Chief Investment Officer, and at least 2 other individuals selected by and serving at the will of the Chairman of the School Land Board, either from Texaco staff or other qualified individuals. The CIO will serve as the Chairman. The role of the Chairman is to preside at meetings, carry out the business of the IEC, and to fulfill any other duties and responsibilities that may be required to effectively manage the IEC activities and functions. In addition, the Chairman will serve as the IEC spokesperson to the School Land Board regarding investment recommendations and proposed modifications to the policy. As far as meetings are concerned, those are convened by the Chairman as needed. However, regardless of its need, we'll have at least 2 meetings per year. One will be between January 1st and June 30, and the other between July 1st and December 31. We meet several times a year, so this will not be a challenge. As far as a quorum and voting is concerned, a majority of IEC members will constitute a quorum for the purpose of voting. Attendance may be in person or by phone, video, or internet conference, provided that all members can hear each other and any other speakers addressing the committee. Each IEC member has 1 vote. Members not in attendance are not permitted to vote. Voting by proxy is not permitted. Members may cast votes orally, by phone, or by email. An affirmative vote of a majority of the members in attendance in the meeting in which a quorum is present is required to approve any action taken by the IEC. There are 4 actions that the IEC can take. The first is to approve. The second is to approve with contingencies. The third is to table to allow for the resolution of specific issues, and the fourth is to reject. Also, as chairman, I will appoint an investment management employee at each meeting to serve as the secretary of the IEC. For such meeting, the secretary will take notes, record votes, prepare minutes, and fulfill any other duties and responsibilities required. And then those minutes will be included on the agenda for the next succeeding meeting for a review and approval by the IEC. That is the gist of the charter. As I mentioned, it is a formalization of the process. It's already in place. I'm happy to answer any questions.
Thank you, Rusty. It's good presentation. Generally, I have 0 issues with it. Rusty, you and I chatted about this earlier today. I have a couple of questions and then a statement, and then I'll make a motion. The members of the IAC are, how many are there?
There are currently 4 members.
4. Okay, and they're you and who else?
Mark Havens, Brian Carter, and Hector Valle.
Okay, and you said the chairman of the school land board appoints 2 of the members?
All of the members.
All the members. And that would be the commissioner?
So the CIO is automatically on,
Yeah, yeah.
and then the chairman appoints at least 2 others.
And then is the chairman of the school land
Yes.
board the commissioner?
Chairman of the school land board,
Yeah, yeah.
land commissioner, yes.
As I said, generally, I don't have any issues with what's been done, but I have just some questions that frankly, I think Rusty gave me ample time to come up with them over the last week or so, and I haven't done that, so I'll admit that openly. But my motion would be to table this to the next meeting to give me time, but if that causes someone a problem, let me know, and I will.
That will not cause
at
a
all.
problem.
Thank you for your generosity there.
Of course.
I move to table this to the next meeting.
So moved.
Thank you.
Next item on the agenda is number 8. I'm sorry, do I need to,
Probably take a vote on the motion to table, just
okay,
for the record.
so I will second the motion, and motion is made, seconded, and carries unanimously to table the item until our next meeting, and we're currently scheduled for 2 meetings, I believe, in December. So we can,
So we're going to do one meeting
1 meeting in December,
on the 18th. Yeah.
on the 18th of December.
Thank you.
Excellent.
Thank you.
Next item is number 8.
Thank you, Mr. Chairman. Members, this is the quarterly investment report for the period ended June 30, 2018. This is a non-voting item. I'm pleased to present you with the QIR for the Permanent School Fund Investment Portfolio for the period April 1 through June 30 of this year. The performance measurement calculations and the statistical data presented in the report were prepared by State Street Bank and its Private Edge Group, which are the custodial, accounting, and performance measurement agents for the portfolio. I'll go through some brief economic points and then get into the performance itself. As you know, in the second quarter, U.S. GDP increased at an annual rate of 4.2% after increasing 2.2% in the first quarter. U.S. unemployment ended the quarter down slightly at 4.0%. In quoting the FOMC, in view of realized and expected labor market conditions and inflation, the FOMC raised its target Fed funds rate range from 1.5% to 1.75% to a new range of 1.75% to 2%. That was at its June 2018 meeting. They also continued to tweak their balance sheet normalization program, and that concerns the reinvestment of principal payments from its holdings in agency mortgage-backed securities and the rolling over at auction of maturing Treasury securities. They also expect that further increases in the Fed funds target range will be consistent with sustained expansion of economic activity, strong labor market conditions, and inflation near their symmetric 2% objective over the medium term. Of course, the actual path of the Fed funds rate will depend on the economic outlook indicated by incoming economic data. The U.S. commercial real estate market is measured by the NCREIF Property Index, NPI, returned 1.81% for the quarter, ended June 30. Its trailing one-year return was 7.19%. This is the highest quarterly return for NPI since second quarter of 2016 and reflects a new 16-year high 93.75% occupancy rate and continued NOI growth. The second quarter gross total returns for each of the individual sectors were hotel 1.9%, retail 1.32%, apartment 1.54%, office 1.54%, and industrial, which continued its strong run at 3.58% for the quarter. It was by far the best performing sector, and it's primarily due to continued strong performance of industrial warehouse space. In the energy markets, WTI spot averaged $68 a barrel during the quarter. It ended at $74.13 a barrel. It's a 15% increase from the first quarter ending price of $64.87 a barrel. Prices were primarily influenced by heightened geopolitical risk, a smaller than expected production increase of about 600 million barrels per day, possible U.S. sanctions on Iran, and production declines in Venezuela and Libya. Refinery utilization is currently about 96%, which is generally considered to be an unsustainable level, and thus is a bullish signal for future demand. However, a significant uncertainty for future oil prices is the possibility of China imposing a 25% tariff on U.S. crude oil exports to China, seeking U.S. producer exporters to seek other buyers. Interestingly enough, crude oil surpassed hydrocarbon gas liquids, or HGLs, to become the largest U.S. petroleum export in the first half, with 1.8 million barrels per day of exports. The U.S. exported 7.3 million barrels per day of crude oil and petroleum products in the first half of 2018, the largest amount of crude oil and petroleum product exports ever for the first half of a year. Most of these exports went to Asia, China, South Korea, and India, and Europe, Italy, UK, and the Netherlands. Natural gas spot prices continued to hover around $3 a million BTU during the quarter, and they averaged $2.97 in June and about $2.80 per million BTU during the rest of the quarter, ending at $2.96. It's about 10% above the first quarter ending price, which was at $2.69 a million BTU. Most analysts continue to think that rising industrial demand, LNG exports, increased exports to Mexico, and continued coal to gas switching is going to foster medium to long-term supply-demand support. However, there's an upcoming wave of infrastructure build-outs in the Appalachian Basin scheduled to come online in the near future, and substantial amounts of associated gas related to the ramp-up in U.S. domestic oil drilling will probably reinforce short-term pressure on prices. Turning to the performance of the portfolio, if you'll look at page 2, performance measurement summary, and go through these numbers for you in some detail. And we're looking at gross returns without cash as the performance metric. That is the measure that measures the actual performance, investment performance of the portfolio. For the first quarter, the return was 5.04% versus a 191 on the benchmark. That's a spread of 313 basis points and a 2.64x above the benchmark. The infrastructure sector of the portfolio was up about 2% for the quarter. Real estate was up about 2.1%, but energy was up about 8.5% for the quarter. So most of that bump is coming from the energy side of the business. Looking at the returns, one-year return, again, we're looking at gross returns, was 17.07% versus 7.07 on the benchmark. That's a positive spread of 1,000 basis points and represents a 2.41x on the benchmark. Three-year return, 15.02% versus 7.06 on the benchmark. It's a positive spread of 796 basis points, or a 2.13x on the benchmark. Five-year return just under 15% at 14.9% versus 8.15 on the benchmark. Again, positive spread there, 675 basis points, or a 1.83x. At June 30, there was about 35% of our total existing capital commitments that remained unfunded. 27% of real estate, 51% of infrastructure, and 31% of energy. Looking on page 3 of the report, there were 3 new investments made during the quarter, one each in real estate, energy, and infrastructure. They totaled $500 million, and there was one new midstream energy infrastructure co-investment with a capital commitment of $125 million. That was made alongside Global Energy and Power Infrastructure Fund 2 through our co-investment vehicle, Capital Co-Investments 16 LLC. And then in the third quarter, subsequent to second quarter, the board also approved one new investment in real estate totaling $75 million and $180 million expansion of Capital Co-Investments 8, which is an existing midstream energy infrastructure co-investment alongside NCAP Flat Rock Midstream Fund 3. If you look at page 7 and page 8, these are representations of our portfolio allocations. On page 7, we're looking at the allocations based purely on NAV, net asset value basis. And on page 8, we're looking at a combination of NAV plus unfunded commitments. On a purely invested basis, which is page 7, the portfolio was slightly over-allocated to real estate at 34% versus a target of 33%. Infrastructure was at 17% versus a target of 32%. And energy was at 49% versus a target of 35%. I would point out that the low infrastructure allocation is primarily due to several monetizations in that sector of the portfolio that resulted in significant amounts of capital being returned. So that portion of the portfolio, mostly related to oil and gas midstream projects, they seem to be turning over faster than the other parts of the portfolio. So that's why that number is low, but that's on an NAV basis. These allocations are going to continue to change over time and become more aligned with our targets as more of the unfunded capital commitments to those spaces become funded. For example, if you'll turn to page 8, you'll see this is a picture snapshot of allocations based on NAV and unfunded commitments. And if you look at that, real estate was 31% versus a target of 33%. Infrastructure was 26% versus a 32% target. And energy was 43% versus 35%. So they are targets. They're called targets for a reason. We can't control how that winds up because of the types of investments that we make. They're purely at the whim of the managers and when they call the capital. So we take a long-term view and try to plan accordingly. As far as geographic diversification is concerned, if you look at page 11 to 12, you can see a breakdown of that. Currently, the allocation to the U.S. is about 94% of the portfolio, compared to a target of 90%. And the international allocation is around 6% now, compared to a target of 10%. The Westbrook commitment that you just approved will help bump up that international allocation some. Looking at page 13 to 14, you can see the investment manager exposure. On a purely invested basis, the portfolio is well diversified across a platform of 26 different managers. The policy statement limits the exposure to any one investment manager to no more than 20% of the total portfolio. Our investment manager exposure at June 30 is well within that range. The top 5 highest exposures are USAA Real Estate at 11.3%, followed by NCAP Energy at 9.4%, Macquarie Infrastructure Partners at 5%, Lime Rock Resources at 5%, and Morgan Stanley Real Estate at 4.5%. Co-investment vehicles are grouped by manager and presented separately. The highest grouped co-investment exposures at the end of the quarter were First Reserve at 9.7%, followed by Intervest 5.6%, and ArcLight at 4.6%. That concludes my presentation. This is a non-voting item, but I'm happy to answer any questions you may have.
Any questions from the board this time?
It's a good presentation. Thank you.
Thank you.
As the numbers are represented here, you're doing a great job.
Thank you. My team appreciates that.
I echo the statement.
Thank you, Mr.
Great work.
Commissioner. Appreciate it.
Next item on the agenda is number 9. I may ask you to stay fairly close, Rusty, as I may ask you to kind of go through
Okay.
where the board has been in the last several months on the issue of releases from the real estate special fund account, which is our next item on the agenda. I believe we have a member of the state board, Tom Maynard, here and he's offered himself to answer any questions that the board or staff may have as we visit on this issue. As was required by law, August 21, the board met to authorize release of $600 million to the available school for the 2020-2021 biennium. The board received correspondence on September 14th from the state board requesting that we reconsider the board action. I responded by letter, and I'm speaking on my behalf since I don't vote for the entirety of the board, on September 19th that I would not reconsider, and I stood firmly by my vote. However, I did state that if the State Board of Education would release more to the ASF as a percentage of their spending rate, that I would ask for releases, additional releases from the School Land Board. And so in light of the State Board's action on Friday, I believe it's appropriate for the board to discuss how we can release funds to the State Board in addition to the $600 million that we've released to the ASF. So I don't believe that anyone in the audience is offering to submit public testimony at this time. If anyone is, or anybody out there, if they're streaming, wants to testify, I ask that you go to the front and submit a witness card. But while we do that, I'll turn it over to you, Rusty, and perhaps you can provide some more detail for the edification of the board, and then we can conclude with the discussion and perhaps a motion on this issue.
Sure, thank you, Mr. Chairman. So, you should have a spreadsheet this is the same spreadsheet that I gave you when you were considering the initial release that you did approve in August of $600 million to the available school fund. So, make sure you.
Go ahead, Rusty.
Okay. So if you'll just look at this spreadsheet, what I did was as you know, we adopted rules that lay out how we determine what the amount available is every 2 years. And that calculation resulted in a total amount for the fiscal year 2020-21 biennium of $655 million. Which I presented to you as amounts available to be allocated between those 2 years of $310 million available for fiscal year 2020, $345 available for fiscal year 2021. And then I presented you several options to consider in how you made your determination. The first option, option A, was to release $300 million each of those fiscal years directly to the available school fund and zero to SBOE. As you know, $300 million is currently a legal cap on the amount that you can release directly to the available school fund. So option A just reflected releasing that maximum amount. Option B was very similar, except the option B gave $300 million to the available school fund for each of fiscal year 20 and 21, and then also $10 million to SBOE for fiscal year 20 and $45 million for fiscal year 21. Again, that was the total 6% number of $655 million. And then the other options were just different ways of splitting that amount. So that was the sort of option summary that I gave you, and as you know, the board adopted option A. So if you're just looking at what other amount was available at that time according to the calculation done in accordance with the rules adopted by the board, there was an additional $55 million that could have been allocated not to the ASF because you're capped out there, but to SBOE. So that's sort of a summary. I'm happy to answer any other questions that you might have, or if there's any other information you might want to discuss.
Scott, do you have any questions?
I may have a question in a moment, but not right now.
Well, you know, upon further reflection, I would be open, just in light of the incredible performance of the portfolio and the fact that we will have a fair amount of cash to be able to invest next year, that that we move as a board to release that 55% or 55 million to get us to the full 6%, basically, of the trailing average market value of the trailing 16 fiscal quarters of the portfolio, and that we will work with the State Board of Education in the future to better communicate to them our release, both to the State Board and to the ASF. I stand behind the board's decision to move forward with the release of the 600 million to the ASF, but because of your performance and the staff's performance, feel that the portfolio is in as good a position as it possibly can, and that we can be a partner with the State Board. Additionally, the State Board did release an additional 111 million to the ASF, so that puts the full figure, by my rough math, at over 2.9 billion in the ASF available to the legislature in the next session for the 2021 biennium, which I believe is a record performance between the two portfolios, and reflects the good work of both of the boards. So that's the motion that I would put on the table. And if, Scott, if you have questions or would like to second that motion, we can do so.
Yeah, I appreciate it. Thanks, Commissioner. A couple questions or comments, or both. When we made the vote in August, I asked the questions of where does the money go? If it goes to the State Board of Education, does it go for the benefit of the Texas school children? If it goes to the available school fund, where does it go? Does it go to the benefit of the Texas school children? The answer that I remember, or at least that I understood, was either way, either place, it goes to the benefit of the school children in Texas. So I've received one or more letters from people saying that their kids are not going to get textbooks. So I don't really understand that. It seems to me that it's more of who's taking credit for getting the money. And so I would make a second to the motion, but I would like for someone to record, I think it's a denominator issue, might be a numerator issue too, but I would like for when money goes to the available school fund and percentages are calculated, I don't want there to be double counting on the percentages. And so I would make my second with that to say, let's make sure that the percentage that's reported as to what percentage which entity is giving to whom is using numbers that are allocated correctly. With that, I second your motion.
Fair enough. And so for the record, I don't know what the legal implication may be, counsel, in terms of, because we cannot obviously control how the State Board reports. I know Sunset has made a recommendation that we work with State Board on not only reporting just from a portfolio standpoint, but perhaps we could add that, the release amount percentage in terms of how that's calculated to the Sunset's recommendation.
I think you're right. You are certainly, as a board, can vote to, assuming the motion is adopted, to release the additional 55 million. The terms of the other points that Scott just made, I think those are probably more in the line of a resolution and a request, since obviously you cannot control what the State Board does. We can certainly, you can instruct staff on the reporting that we do to ensure that it doesn't double count, but the remainder of that would simply be a request, a resolution requesting of the SBOE, since you don't control what they do and how they report.
Yeah, I don't need to make it a big issue. It's in the minutes of our meeting that I said that, and I didn't ask for the motion to be changed. So I think that if in the future the reporting is obfuscated, we can come back and make a resolution at that point.
Fair enough. I'll simplify the motion to say, I move that the board release an additional 55 million from the PSF to the State Board of Education.
Second.
Motion is made, seconded, and carries unanimously. That concludes our meeting. Before we do, just want to say we'll continue to work with the State Board, enhance communication. Both teams are doing a solid job to fund education, and we'll work together to further communicate to the public what these accounts actually mean, what they mean for classrooms, and for our teachers as we head into a legislative session. So there being no further business before the board, we are hereby adjourned.
Thank you, Mr. Chairman.